Hello, traders, and welcome to this live intraday strategy webinar. Today is Wednesday, September 13th. And I'm Michael Boutros. Good to be with you guys here this morning. Dee, Kelly, Kevin, Pooja, Rushton, Steve. Good to see you guys all in the room. So, D with an early question saying, can we take a look at dollar yen today at some stage? Please, sure. You know my feelings on where dollar yen is right now, but we'll definitely take a look. The yen crosses have been of interest. If you noticed, last night's update was essentially all on the yen crosses. Not all, but certainly as it pertains to pound yen, Kiwi yen, Euro yen, even Aussie yen has an interesting level on a daily chart. I didn't want to highlight it because I didn't have anything really intraday to necessarily point out, but all the yen crosses do look very interesting, D. So we'll take a look. We'll start off with pound yen. We'll take a look at the pound dollar, uh, Kiwi yen, and Euro yen, as I mentioned earlier. We'll then take a look at the Euro dollar in and of itself. Came off support, really nice range. An update to the previous report on Aussie dollar and Euro key. Obviously, we'll take another look at gold, which is in a critical zone right now. And that's what's on my menu for today. So if there's any trade setups that you guys didn't hear or that you'd like to mention or note, want to take a look at, please feel free to throw them on the message board at any time. So let's kick things off by going over yesterday's update and specifically the pound crosses. Obviously, we have the BOE on tap tomorrow. Here's what we're looking for, guys. It's been a 7-2 split. Hey, Karthik, good morning to you as well. It's been a 7-2 split with regards to the vote to keep rates on hold. We do have a new board member this time around, so it's going to be interesting to see if that changes. The main takeaway that we're looking for is, look, the BOE had interest rates at 0.5% all throughout the financial crisis. Like, that was the record low that they had post-crisis. And then they lowered it to 0.25% on the back of Brexit, just as that added cushion of accommodation with all the uncertainty that surrounded that event. Now, the argument has been, do we just scale back that last push to 0.5 again, where we were? Or is the BOE going to be more in line with, let's just keep things the way they are right now? As it pertains to data, CPI is starting to come out, or is starting to surmount. I mean, yesterday's CPI numbers were pretty strong. Core numbers came in above expectations. However, wage growth continues to be static or stagnant. It's sort of the same issue that they're seeing here, that the Fed is seeing here, although even headline inflation here is a little softer. Core inflation in the UK has been picking up, but that wage growth inflation figures just aren't there. So there's going to be sort of a question mark, and what markets are looking for essentially is that going to keep them more on a reserved hold, or are they going to say, look, inflation's starting to pick up, maybe we should start to, move ahead of the ball here. And the BOE is notorious for being behind the inflationary curve. So they might look to at least start to prep markets for possible normalization moving deeper into the year. That being said, we're not fundamental strategists here. We're looking at the technicals. I just wanted to give you the backdrop of what we're heading into tomorrow and why it's important. So as it pertains to the sterling crosses, look, we've had a phenomenal rally. The question I ask myself now is, are we sort of in the lookout for a near-term pullback, or does it fuel the next leg higher? Here's what the daily chart looks like. It's the same daily chart we've been working with for weeks and months at this point. So the initial target with the topside break that we were talking about on Sunday was 132.70. That clipped yesterday. Next level of interest is actually 133.70. And there's a lot there, okay? Not only do you have this swing high here from early August of last year, that's not really the big play, but you have a nice confluence of median lines and parallels. Here's basic parallel support extended off the high from last year's December rally. You can see that we turned just ahead of it, and that converges at 133.72. Okay. Also, the upslope that we've been working with on this parallel off the lows, the median line has offered some really nice pivots in price. That also converges right in that region. So obviously, we'll have our strategy webinar tomorrow morning, and we'll kind of see what the aftermath looks like. But a gunshot approach, if you put a gun to my head, kind of the ideal play I would see is maybe one last stretch higher into this resistance zone failure, a pullback that allows us to get back on the long side. I'm broadly constructive sterling, guys. And keep in mind also that, we basically made a breach of the yearly highs. We closed above it. So momentum's in overbought territory. It's not what you want to fight it. So our bias is still unchanged. Everything still looks pretty good. Here's what it looks like on the intraday charts. You're seeing a little softness here today. You got a nice outside candle here on the 4-hour chart. But just to bring it back to what we were looking at yesterday, again, that daily chart kind of failing just above here. Here's the 240 last night. Okay, we stretched just higher. Our targets were that upper parallel and 133.72. You can see we turned just ahead of that. I want to stay constructive above 132.24, which is the initial weekly opening range high and last week's high. That converges on parallel support. Okay, bullish invalidation for the immediate uptrend still remains at 31.58. Okay, an objective break of the weekly opening range lows would certainly shift this to the downside. Not our favorite scenario, but certainly got to know where the levels are heading into such a major event risk tomorrow. Here's the 120 looks like. Okay, so, like I always say, trading these interest rate decisions is not always the easiest task because it's not always a clear cut, better or worse than expected print like it is with non-farm payrolls or CPI. So the devil's in the details. The market's going to take a little bit to digest some of that commentary, but there's two ways this could play out. Either you get the initial strike higher, which I'm not going to chase at this point, knowing that there's structural resistance right up here, and you get an opportunity to fade it. Certainly if they hold rates and it spikes, that would be the best way to fade it. Or if they suggest that they let me say this, if they leave the statement unchanged, they don't open up any new doors for possible normalization moving forward, any type of strength, I would look to fade for a near-term recovery. On the flip side of that, if it dips into support, watch for possible entries at both of these levels. Topside targets 133.72. If that breaks out, you're likely to see this thing take another real steep move higher. 34.45 and 34.80 would be the next upside targets in such a scenario. Any questions on the pound? I actually, interestingly enough, is Pooja in the room? Yes, she is. Interestingly enough, Pooja, I actually like pound yen better. I kind of feel naughty for saying that, but intraday price action has been very impressive, and the range is certainly there. So if there are other questions on the sterling, again, we'll take a look at this tomorrow right on the aftermath of BOE, kind of get a better picture of what's going on. If you're not in a position, stay nimble. Again, these interest rate decisions are not the best time if you're newer to the strategy. Certainly for those of you who've been with me for a couple of years, it might be a nice possibility for an entry here tomorrow. So I'm flat. Wish I was long, but I don't have any positions right now in pound. Now, pound yen. That was number one. Number two, pound yen. Here's what pound yen look like. So the previous day, if you will entertain me for a second, the previous day's update, we talked about the fact that pound yen had made a clear break and a definitive break, and Jamie pointed this out in the swing update as well. Very clean. I mean, this is sort of the prime example. I think I went over this with you guys yesterday. I'm not sure if I did, but this is a prime example of a head and shoulders, a real head and shoulders, as opposed to everything that you see posted on the Twitters. So the break above the neckline gave us a measured move for pound yen, and that measured move has been taken out. And that's the whole point of getting, identifying a head and shoulders formation. We just went below it. So the high that we made in overnight trade was 146.66. The actual, measured move takes you to 146.71. So a 5 pip slip, grant me that. At the end of the day, I do think this is still constructive. You want to stay constructive above that same former key resistance level that we were talking about earlier. Here's what we looked like earlier in the week. This was our first target with a break looking for 45.39 and 46.73. That was a pivot before we actually put on the objective measured move here of the head and shoulders formation. So add that to a 1618 extension and gave you a nice cushion of resistance here, 146.17 to 147.16. I still think you get to spike into this at some point. But this is a region where I think could cause a little bit more of a resistance hold for pound yen. So keep in mind, not only do you have that measured move, not only do you have that Fibonacci sequence to consider, but you also have basic slope. So slope support, extending off the high here, the pivot break saw acceleration. Another extension off just the high that we made back on the 14th of last month also converges on that same region. So what does that mean? Well, if we get a spike into this region, look for a reaction. If we breach, just like I said in pound, you're likely to see this thing explode even more. This is a bullish trend, guys, period. End of conversation. You know, the break that we made yesterday was a basic trendline resistance extending off the 2015 high. Also, this was the single largest day advance that we've seen in the pair since back here. And that was just one day after the low that we made for the year. So the possibility for seeing some real upside potential here in pound still exists. You know, how do I bring that up? Again, don't take my word for anything, guys. You always want to kind of keep things as objective as possible. So here's, you quickly look at a rate of change, bring that rate of change into a 1 day input, and it'll just look to see that's the largest single day gain since back here. So keep things in perspective, always keeping in mind that, you know, these types of factors that we identify are just further evidence, right? That we are seeing some sort of larger picture advance here in pound yen. One other thing I wanted to note, and I think we talked about this yesterday too, basic trendline support touched once, twice, 3 times. Break saw resistance. The breach above, again, could discount this break. Keeps the focus again above 144.53, weighted to the upside. And that's certainly what the near-term chart highlights as well. So looking to fade weakness here, major resistance coming up at 147, essentially 146.70 into the 147 handle. Any questions on this pair? Larger ATR. So for those of you who are newer, again, to intraday trading, it's a little bit trickier of a trade. You need to have a little bit bigger of a risk tolerance, but you know, the levels are there. The levels are there. Questions, comments, concerns on any sterling cross, for that matter, heading into tomorrow's Bank of England interest rate decision. Keep in mind, you know, the day after, we still do get UK employment numbers, so that's going to be another hit that could offer some further volatility in the sterling crosses as we close out the week. All right, and let's keep the focus here on the yen crosses. So let's jump into Kiwi yen. So here's what Kiwi yen looks like. Again, you know, no surprise, rally to the upside. All the yen crosses kind of, well, the yen itself got crushed basically yesterday as markets rallied to new highs. S&P obviously closed at a new high. Dow didn't quite make it, but you know, we're trading basically right at the yearly highs. So another trade that we've been looking at, here's what Kiwi yen looks like last night. Excuse me. Oops, wrong report. There we go. So, a nice break, objectively, of the monthly opening range. Kept the focus to the upside here. The major area of resistance that we were sort of looking at was this kind of confluence region here, 80.37. You have a 38.2 retracement. The 100 and 200-day moving averages, technically we closed above them yesterday, but not by too much. So I don't put too much emphasis on it. That being said, certainly the risk near term is for a little bit more of a pullback here, but you want to stay constructive above 79.50, largely speaking. Here's what the intraday chart looked like yesterday. As we were testing that region, we said, look, even a little bit higher, 80.60 would be those former swing highs from August. That's the upper parallel. So, you know, while this still is constructive, I'd be looking for a reaction there for a setback, and then I'd be looking to possibly get long off of a pullback here. So I'm looking to use this. If we break slope support into US trade today, what you want to do on this trade is just tack on a quick retracement. Like this. Again, I don't know that this is going to be retracement that's going to be operable, but just to show you how I kind of move through the trade. So if we were to see a break of this median line, or specifically of the lows here, I'd be looking for these retracements um, as sort of initial targets for possible support, possible rebound. One thing I do want to note is that high. It's a real soft target. I don't want to clutter up the chart, but 79.90 would be an area of which maybe could offer something. If you look back in price action, I was checking this out yesterday. You kind of got a decent pivot there. Support, 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 resistance. Obviously the highs for August, for that late August rally. So it could see something there, but largely speaking, this is sort of the region of which you want to stay constructive while above. Topside targets 80.60, and again, if we breach that upper parallel, off to the races. There's really a lot of room here too. Now, I'm not so super crazy about the Kiwi strength, but if yen weakness persists, it seems to be a pretty clean pattern. Constructive above 79.54. Again, a topside break, you're looking for 81, you're looking for 81.72, 81.67. Seeing as how this is a yen cross, I wouldn't be too surprised to see some sort of blow off. It's been a super chop fest, specifically on dollar yen, which I'll cover for you here, D, in a moment. But I'm very timid around the yen crosses, so I just wanted to say that real quick as we get into this. Near term, focus on this range. If you get the downside break, don't get suckered into the shorts, in my opinion. More so, I'd be looking for a little bit more of a rebound. Remember, the trend line we came off of here is a multi-year trend line. This is off the lows they made in June of 2016. But you tested it so many times, once, twice, 3 times, 4 times, 5 times, 6 times. There was the 7th. Likely get a little bit more of an upslope there. Not to mention, on this whole decline, you were seeing divergence in momentum. All right? Price action making a new low. The oscillator failing to confirm that new extreme in price. So that's Kiwi yen. Any questions on Kiwi yen? For the yen crosses, sideways movement scares me, Karthik says. I don't even know what to say to that. Yeah, I mean, for those of you who know me for a while, I tend to stay away from, specifically dollar yen has just been, I've not had a good track record over the history of my career in dollar yen, but the yen crosses, when they do get clear, they do get clear. And the one thing I do like is that when they choose a direction, they choose a direction and they go. But yes, absolutely, Karthik. You get this time where it's like this. When it does chop around like this, I mean, real near-term guys, if you're looking at 5-minute charts, 10-minute charts, yeah, we could probably scalp the hell out of this. But lately, I've been more so in the mood of, or in the mode of trying just to catch a little bit more of a swinger type trade than 2 intraday, specifically on these larger ranges trade, on the larger range trade. So, yeah, you're going to see sideways movement every now and then, Karthik. Markets don't just move in one direction, shoot there, right? But in this kind of trade, in the yen crosses, you kind of need to be in it because when you get a move like this, there's no opportunity to try to chase. There's no opportunity for entry because the market just shoots. So you kind of need to take a leap of faith sometimes on these yen crosses. Did you go over CAD yen? I did not, Steve. Do you want to? I was looking at it yesterday. I kind of don't really have a strong opinion, but we could take a look. Here's 4. Let's take a look at CAD yen. So, I thought yesterday, well, why not give him a look at all the yen crosses since we're since there's such a big move in all of them. And I looked at this chart for a while, and I kind of didn't really know how to interpret it. Besides this, so the intraday, I literally don't have a picture for you there, Steve. But for the daily chart, this is what I was looking at. Now, excuse me, near term, I do think you're heading in some interesting areas of resistance. Now, the problem here is that CAD strength is just at a pause. I'll just draw your attention real quick here, Steve, to dollar CAD. This is a trade we've been following for quite some time. I highlighted this early in the week, 120.56. A little bit lower, you have that 50 line for the larger median line formation we've been following off the highs. We turned just ahead of that. We've been holding a tight range below former slope support, now resistance. So CAD strength has taken a pause, but I don't think it's reversed yet. So for CAD yen, let's go back to CAD yen. Yeah, we've been seeing the yen weakness travel higher, but I'm a little concerned here as we head into this region. Basically, what you're looking at is a 50% retracement, largely, this is off the highs that we made for 2015, excuse me, 14, okay? And you also have the upslope here, 50%, or the 50 line coming in right in line with that region. So, what do you want to do? You want to try to fade this um, on the strong and kind of buck the trend for the yen weakness. I don't know if I'm ready to do that yet. Obviously, you're seeing divergence here in momentum as price action made a clear higher high. The oscillator failed to make that higher high. I don't really have a play on it, Steve. Put a gun into my head or put a gun to my head. I would say, listen, if it spikes above this and recovers below, yeah, sure, play the recovery in your term, possibly just to those highs, 89, 80, maybe just a 90 handle. But trying to get too aggressive on a position here for CAD yen, I just don't think it's there yet. If you're holding longs, this would be certainly a nice area to start taking some off the table and bring your stops to break even or better. But for new entry, Steve, I just don't see it right now. Let's take a look at near-term price here. Just a moment. I can see the last time we looked at this was back in June, so not a very popular pair for me. Here's your weekly open. Yeah, there's nothing that pops out at me here. Ugly, ugly. Well, I may have something there. Yeah, there's really not a strong setup here. I don't even want to. I don't even want to open my mouth and try to even put an outlook on this. All I would say is keep an eye on the daily chart here. What was this for, Steve? Keep an eye on the daily chart here and definitely see how we respond. I think. Give me a sec. I think we had something, if I'm not mistaken. Um, no, there's no CAD data on tap this week worth of note. It's going to be the US CPI numbers. Okay, and that comes on tap tomorrow, obviously. So um, look for a reaction around that level. If we clear, your next topside target is all the way up at the upper parallel, and that gives you a lot of room. I just think near term, you might be kind of pushing it to try anything on the long side from here. Steve says, no worries. Since you were working on the yen crosses, I thought I would ask. Thank you. Hey, no problem. You're in the right session, man. Feel free to ask any questions you guys have. And I'll always give you my true opinion. I mean, if I had something compelling here, I'd be pretty excited, but I just don't think it's there yet. Okay, Karthik wants to look at Euro Yen. And that was next on the list, Karthik, so you beat me to it, buddy. Here it is. Euro Yen, another one where last night I just wanted to highlight the daily chart, a very similar situation to CAD Yen in that it's just coming into a little bit more of a critical resistance, but there isn't necessarily a near-term play. I know it's the intraday charts page, guys, but a lot of times before I even provide you with an intraday price chart, a lot of times we just got to kind of track the daily and see where we are. And once we reach those thresholds, then we start to see if we can figure out some near-term targets. But as it stands for Euro Yen, look, I think this is actually a decent one to play that's Euro dollar. If you're short Euro, which I happen to like, I think this is a play where, near term, you possibly have some more long side to play before it turns over. So it might be a decent hedge. New exposure from here, like I said, is very tough. But look at the daily chart. I just wanted to highlight this key region, 132.28, basically into 132.50s is the upper parallel for this formation. Really decent pivots and accelerations across the median lines. And also you have the 2016 highs, so last year's actual swing high, which is going to be a big deal as well. So it could be a little bit of a break. What I noted yesterday is that this is one of those trades where you did get a conviction break of the monthly opening range. Here's your monthly high. You made a low. And we highlighted this last week, if you guys remember, that the opening range for the month was taking shape just above slope support. It's a pretty clean setup. So inherently, when you see a break of the monthly high, you want to look for a late month high. Well, it's the 13th or the 12th, and we got the break. So, objectively, yeah, I would be looking higher. But if we take a look at the technical picture on the daily, I wouldn't get too excited because you're coming up on 32.30, 32.50, and again, that's a region which could offer some resistance. So, it's a bullish trend approaching resistance. That's what I could say. The breach of the monthly opening range high does actually shift the focus higher, but I would be cautious heading into this region. If we do see a topside break, this thing's likely to explode. Remember, the upside break of an ascending formation will typically be the sharpest part of the rally. So if we do clear this, look for a surge into 134.28. Next topside target would just be some former swing lows here, 136.23. So those would be the next two topside targets on a break. First things first, look for a reaction right here. Questions on Euro Yen? So that's sort of the yen extravaganza look from yesterday. And I'm going to jump into D. Was that you? Yeah, D. Let's look at dollar yen. So here's what the abomination looks like, the mother of the abominations. It's right here. You made an impressive rally. You've taken back all the losses for the month. You're actually trading higher than the monthly open at this point. And very, very similar in that I don't have a near-term setup that I'm very comfortable with. Look, I think we talked about this yesterday in the webinar, and I kind of threw this together. I don't really want to press this on you guys as a major setup, but if this formation is to hold, it's certainly showing some really nice reactions here around that 109 to 88 level. So aside from it being the 786 or the 764 retracement rather of the monthly off the decline from last month's high, or last month's late high, you saw a real nice pivot action along the median line. So resistance, saw pause before the break accelerated higher, and now you're checking as support. So if this immediate rally still is viable, I want to see this thing hold above 109.88. Okay. Also, just as sort of a near-term play, now that we've made this strong reversal, I would be interested to see what a basic retracement off the high looks like. So that's your next topside target. Would be that 38.2 at 109.90 if it does move higher. That would have to be your bullish invalidation level. Near-term support, I want to stay constructive above 105.60. Topside break, you're looking for 109, 110.90, and 111.75 would be a big region too. It's 618. So D, does that help? Again, not too much conviction on this or CAD yen, just for the record. But if I was, felt compelled to trade this, this is what I'd be looking at. Immediately constructive above the median line, like I said, bullish invalidation here. A break below essentially last Friday's close, which we gapped above and never closed that gap. That would be straight up bearish. You'd basically look for 106.40 at that point. Make sense? D says, yes, thanks. Hey, you're more than welcome. Again, I wish I had a little bit more conviction on this. The yen was a great trade heading into August. We got super excited about it on the way down. But this chop fest here, not my cup of tea. Okay, now let's jump into the majors. First things first. So now that I have a picture kind of what the yen cross are doing, here's what euro dollar is doing. There's really not much to mention new here. The same setup that we highlighted back on Sunday, back last week, is essentially still in play. So we gave you an update on the euro yesterday, I think. Yes. And it's unchanged. So the weekly open came into play. We had just come off channel resistance or upper median line parallel last week. That obviously shifted our focus back to the downside. And key support that we noted was 119.10 into 119.28. We came right into the upper side of that support barrier. Saw a nice rebound yesterday. You want to stay bearish below the weekly open, which is 2015. And you really need to clear this side to confirm a near-term reversal in price. And that would also be a break of the objective weekly opening range. Here's your Sunday high, your Monday low. You set that certain range. You saw a rebound here. Look for a break of this range to give you the immediate bias. The favored move is for a downside break to give you a larger correction. That being said, I'd be willing to take a short stance on this as long as we stay sub 2015. If 2015 gives out, you might go right back into 2092. You might go back to check the highs because you have the parallel there as well. So I don't want to get caught short into this. If we break basically the objective weekly opening range highs, I don't want to get caught on this trying to chase it. So that's kind of my game plan: is stay short. Stay short below 2015. Just stabbed myself with my pen. And look for that break sub 19.10 to really get this thing going for a little bit more of a correction stance to the downside. Ultimately, we do want to be long, right? The broader picture for Euro state still looks pretty damn constructive. I mean, this is a broader uptrend off of the lows from 2015 and an embedded uptrend within that. So yeah, I do think you look for that small correction here on exhaustion, building divergence. You got a trigger break, got a lot here to look at to give you confirmation if we do get that break. And like I said, ultimately a setback here would offer a better opportunity to get back on the long side. Questions on the euro? Again, pretty light on a euro event risk for the rest of the week. I mean, you get employment data, I think, but I'm not sure that's really important at this point. The bigger play is going to be really the dollar's reaction versus this as we head into US CPI numbers and the Michigan of Confidence surveys on Friday. Questions on euro dollar? Here's 30 looks like. Okay, next up on tap is good old Aussie. Sort of slow burner right now, not really doing much. The only thing I do want to note here is that you have a very clean weekly opening range taking shape just above Fibonacci support. So there's really nothing super compelling to update you on here, except that the levels remain rather clear. I don't think there's any confusion as far as what to do and when to do it. But as I said yesterday, there's nothing to do right here mid-range. You either want to find a topside break of the weekly opening range to look for a resumption. Interestingly enough, the weekly opening range highs come in right along with that same parallel that we've been following. So that would give you sort of resumption looking for 80.87, 81.50. If we break this low, yeah, that would shift the focus for the week to the downside, but I still wouldn't get too, bearish well above 79.66. And that's a 50% retracement of the advance, but also basic trendline support off the lows. Nothing fancy. So yeah, weekly opening range break might give you a nice drop in 79.66. Larger picture stays constructive while above this. And it's make or break here, basically. It's make or break here. Also, look at those former swing highs from last month. Trendline support. The weekly open comes in just lower. So this is sort of your major support zone and bullish invalidation. Momentum has been showing divergence. So again, further highlighting the risk of a pullback, but we kind of need to see a resolution of the weekly opening range. Ideal scenario, you see a drop into support, gives us opportunity to take a long stance and look for the resumption. Anything on Aussie? Not really much new here since yesterday. So Rushton saying yay. I'm assuming that you like that then. For the Aussie. I hope it works out. But another one that's in a constructive trend. I mean, this is one that we looked at. I don't know if I showed it to you yesterday here in the webinar, but we looked at on the weekly charts, right? This is another one which had a real weekly compelling case. Remember the euro weekly compelling case for the reversal off this region. We talked about the sterling compelling case for basic trendline resistance off the 2014 highs. We talked about Aussie dollar, and certainly in the Aussie trend, longer median line or a parallel certainly got tapped, and that's why 81.68. I was looking for that last stretch there, and then to take a further near-term short stance heading lower. Obviously, weekly divergence is something that you pay close attention to. But until we break just the basic weekly opening range here, kind of need to sit on your hands for Aussie. Russian says, yay, that you're checking Aussie. I'm going to sleep waiting for a decent move either way. Well, the U.S. Open is always the best time to do it, Rushton. That's when we really get some of those opening ranges take shape and some of the moves. It's a good thing. We don't really talk about timing so much in this webinar, but that's really my best time, guys, for repositioning is heading into the U.S. opening range. The close of Europe can oftentimes be another really great time when markets will stretch into their final high or low for the session. So make sure we're also being mindful of when we're getting into these positions as opposed to just where. All right, that is number 6 was Euro, number 7 was Aussie, number 8. Let's take a look at Euro Key. Where art thou, Euro Key? There it is. So, by the way, is Habib in here? Habib. Okay, he's not in here today. So Euro Key looks like this. Remember we were talking about that pitchfork that we added saying, hey, look, we were looking at this ascending channel formation. We were waiting for the break last week, right? We came into support and then we rebounded higher, but we failed ahead of the previous highs. And we came into this week saying, look at that trendline support. I mean, the risk is if we break that to the downside to see a deeper correction here in Euro Kiwi. Kiwi strength has also been certainly a benefit to this move, right? So yeah, I was looking lower. 164 initial target, 163.45 secondary target. Then you come into longer term median line support, but the focus was lower below 65.45. So the focus hasn't changed, but what I did want to say is we took out both those targets and we saw a rebound. So I wouldn't start to try to fade it just yet. If we get a stance or a push back into the upper parallel, that might be your better spot to try to get short again. But now that we've sort of come into both of those targets, 164.45, 163.45, 164, and rebounded, I think it has one more high. If it's just going to be like an A, B, C, you'd look for that extension move back into the upper parallel before turning lower. I don't know. All I do know is that this is the big support zone that I'm focused on. And if we break below that, your next downside target, soft target at 62.46, more significant support down here at the lower parallel near 161.33. Questions on Eurokey. Russian says, Michael, what time are we referring to as the open of U.S. markets? Don't they open at 8 a.m.? So, Russian, the futures markets do. The cash markets don't open till 9:30. So 9:30 is when, usually when I'm looking at the opening range, I'm looking at like the 8:30 to 10 slot, to be quite honest with you. And as I always say, this is a good kind of review. When you're looking at the opening range, Russian, don't stress time, stress price. What does that mean? Um, let's say 8:15, 8:30 comes around, 9:30 comes around, and the market's just traveling in a straight shot to the downside and then rebounds. I'm not going to stop at 10 o'clock and say, oh, okay, it's 10 o'clock, so this is the opening range, and I'll look to play a break of this range. No, you need to stress price. So all I'm looking for to keep things as basic as possible, Rushton, is I'm looking for a market to make a high or a low and then test the other side of that range. That's it. It could happen in the first half hour of this trading session. It could take up to an hour and a half to define that range, and then you look for a break of it. So I don't really want to give you a static time, 8:30, 9:30, 10:30. I don't want to do that because sometimes the opening ranges pan out a little bit later in the session, sometimes a little bit earlier. But typically for me, I'm looking for that 8:30 to 10:30 time zone, that hour and a half, to really tell me kind of what the range of the market's doing. Does that make sense, Rushton? Because when you get full market participations, when cash markets come online, the U.S. Stock Exchange opens at 9:30. So hope that offers some background info on that. Yes, thanks. Appreciate it for the clarity. I'm more than welcome, sir. My pleasure. Questions on Eurokey before we move off? We did do dollar yen after CAD yen, right? That was okay. Number 10 here, we'll do gold. There's nothing to update, but I just want to tell you the levels are super clean. Okay, the levels are super clean. I mean, we came into on Sunday as this thing had just made a stab the day before into the 2016 high day close, 1355. We literally just peaked above it and closed lower on this session. That in and of itself put a bearish call on it. So add to that, you're seeing momentum here finally on that last drawdown that we made 2 days ago, break below that momentum trigger. And it suggested you have a little bit of a pullback scenario ready to go. Initial support, 113.21 is what we noted into 113.25. That's exactly where we bottomed and found some support. So now you have a really nice objective kind of, I don't want to call it an opening range because the actual concerted opening range high is up here. But I'll use this range right here, 1338 into 1321, sort of a nice little range to work with. Look, if we were to break below this, I'm neutral. That's the monthly open, 1320, 1320. 1321 is a 786 retracement, okay? And that certainly would kind of give us a little bit more of a, or let me say that would invalidate the immediate advance. Remember, this was a big region of Fibonacci, big Fibonacci consideration to take note of. So it also converges, and I know this is kind of a messy chart, but it also converges on slope. Slope support here, some nice clean pivots. Slope support here also, pivot, resistance, break, acceleration, support in that same zone. Again, gunshot approach, I do think you get a break lower, but in such a scenario, just look for a tag of basic trendline support. I wouldn't necessarily get on the short side, but I'd be looking for a drop into this zone, kind of see what happens near 1300, 1308. Ultimately, I just think this is going higher, and the seasonalities for the dollar do favor that as well. So immediate risk, yeah, probably for push lower. Objectively, if you break the weekly opening range highs, look for a continuation back Topside targets unchanged, 1355. 1366 is the high close. This is the high day close, but this is the actual high close for last year. And then a massive Fibonacci consideration at 1379, 1377. Super clean on the levels. Look for support right here at 1321. Look for a reaction off that level. Questions on gold? All right, guys. Anything else? Any other questions you guys want to address across the board? Feel free to throw them on the message board. That's kind of all I have for right now. I do want to just touch base on Ethereum prices. Did break key support. We talked about 1295 for days, and certainly it held for literally 14 days or 13 days, 12 days for the entire month until we finally broke here today. Watch today's close. Whoops. But certainly that break does put things at jeopardy for a much steeper correction here in Ethereum prices. Whether you want to call this a double top or not, doesn't really matter until you break that low, which I don't think you will. But certainly the risk is for a move lower here in Ethereum prices. Here's what the intraday chart looks like. Give me one moment. Yeah, okay. So, so you guys always know, I'll say this a million times, my favorite Fibonacci confluences are going to be a 618, 100% extension off the high, 618 retracement off the low, or vice versa. You have that exact phenomena right here. 618 retracement from the advance off the July lows comes in at 234, a 100% extension of the decline off the highs, 234. Former swing highs and a decent pivot in price. So inherent target there on continued weakness. Let me just see if there's any structural clarity to the decline here. Maybe stretching it. Maybe stretching it, but highlights that region there if we follow this slope. And this is just off the June highs. So I'm lying. This is off the September highs. Here's your September high. So this is off the high that we made back on the 6th. Got 3 touches of resistance. Taking a parallel off the lows. Just highlights that region. But look, Ethereum prices are a thin market. If you're just getting started trading these cryptos, you're going to see massive swings. Okay, if you're someone who hates taking a loss or really risk averse, well, first of all, if you're super risk averse, you probably shouldn't be trading this market. But if you're someone who's a little bit more timid, one good benefit is that it doesn't really trade on leverage. So your inputs 240, 264. That's the price you're trading at. Wins or losses will be off 264. Just don't be too surprised. There's a lot of big outswings here in this block, and the whole crypto block in general is taking a hit because this whole China story and what's going on. You had even Goldman Sachs calling out Bitcoin the other day. That's also seeing some serious weakness here. So expect interruption, the broader uptrend for the cryptos. We'll reassess this as they start to correct lower. I do not want to be on the short side of them because when they reverse, it's kind of a mean reverting trade, and it doesn't really give you much time to reassess. So don't want to get caught on the side chasing the lows, but I do want to see if we can find some support a little bit lower to possibly reestablish another long position on some of the cryptos that we're looking at. Specifically for Bitcoin, you're heading just a little bit lower into 3702, 3776, a bigger range, but obviously you're talking about a much more volatile pair here. And that's, again, a confluence region of a 38.2 retracement off the advance. This is a retracement of the 2017 range. And then you have a 100% extension off the high. Nice little middle zone there. I'm guessing the 50 line would be just lower, but I'm not going to really stress that at this point. Yeah. Okay, so just a little touch base there on Ethereum and Bitcoin. All right, guys. Oh, crude too, says Karthik. Crude. What's that doing today? I didn't even take a look this morning. Where are you, crude? Oh man, I've tried to figure this chart out every which way, Karthik. Um, I think we go higher. I think we go higher near term, but I don't. I don't have any structure to the advance, and that's why I can't get comfortable. You know, it's not always just about knowing the directional bias, guys. That's only half the game. It's having a game plan, a setup where you have a clear defined stop that's within your risk tolerance, and you have a clear defined target that fits into your risk reward sort of preference. I don't have that here. You know, any type of long exposure, really, you're doing yourself a disservice if you have your stop anywhere below this, or excuse me, anywhere above this region right here. Basically, the monthly open 47, median line support. You have the 200, you have the 100-day moving average just above at 47.30. So anywhere above this, if you were to put a stop, in my humble opinion, would be doing yourself a disservice, because if you see this spill down to here, it's still constructive until above the monthly open. So how do I play this from here? Do I jump into a long, just a dollar, less than a dollar ahead of the monthly highs, ahead of the 200-day moving average, ahead of structural resistance? So it's in this zone right here, Karthik, where you don't have a setup. Again, I like it higher, but I can't take a long at 48.60 with a stop below 47. That's not a risk reward. Again, that's just me personally. I'm much more near term, but that's not a trade I'd be willing to bet on, especially when the top side targets would be so stacked up real close. Your risk to reward would be all out of whack. Does that offer any help whatsoever? Karthik says, yeah, thank you. It's been a tough trade, and it's certainly, with everything that's happening in the Gulf region, you expected to see that there would be some sort of surge in prices just on account of production decreases, on pipeline shutdowns and whatnot. You're not really seeing that, even though the price of crude may be rising. Your gas prices kind of have stayed steady. So it's interesting to see how this will all pan out. But on its face, clear monthly opening range, just above the monthly open. Again, from here near term, I do think you run into 200-day moving average, if not this basic slope support off the highs for the year, before any type of definitive directional bias can be made. It says, okay, thank you. More than welcome. More than welcome. We'll be watching this one very close. I'm certain you'll start to see a little bit more clarity in the broader picture for crude prices over the next coming days. I do think you get crude inventories today, if I'm not mistaken. Yeah. So you get crude inventories today at 10:30. All right. So keep that in mind, Karthik, for crude prices. Might be a decent it might be a decent opportunity if we do get a spike into that 200-day moving average or that upper parallel. It might be a decent opportunity to try to fade it. Um, the one thing I was looking at earlier this month is that momentum has been like kind of really unable. So this is what you look for. You see, since the high that we made for the year, we've seen multiple breaks into oversold territory, but we never made it into overbought. That's a tell when you look back on price action that tells you that the broader bias is still to the downside. Breaks into oversold conditions are actually healthy for downtrends. Doesn't mean it's going to just straight shoot to hell. You're still going to get these massive multi-month recoveries, but when you do get those recoveries, you want to see 70 hold as resistance. You don't want to see momentum pop into overbought. It never gets that opportunity to get so much flow behind it where it drives us in overbought. And that suggests, yeah, you're still to the downside. Now, interestingly enough, on the pullback, look where this thing found support at 40. Well, as we've always said, that's typically indicative of uptrends, right? If the market's going to rally higher, typically on every pullback, you want to see 40 hold as support. So while we didn't break into overbought here, we're starting to hold 40 support here. Starting to think you might get a little bit more of a turn higher. So we'll have to see how crude prices pan out, but let's see if we can't get a tag of those upside targets first. All right, that's number 13, crude. Any other questions? Takes us right up into the end of the session. So guys, I want to thank everyone who attended as always here today. We'll be back on tomorrow, same time, same place. I have one confusion, and let me answer that for you then, Karthik. He says, if the monthly highest resistance is broken and prices are moving further, how to put a target for it? Say that again, Karthik. I'm not sure I get that question. If monthly highs resistance is broken and prices are moving further, how to put a target for it? I think you're trying to ask, what if the market breaks the high, right? If the prices are making new higher highs? Well, then you wait for the pullback. Are you asking how do you get back in? Listen, the way I play it, Karthik, and again, this is just because I'm a much aggressive trader, but if you were to get a pullback, like let's say we got entry somewhere here. Let's say even yesterday we got that pullback into 47.80 and we decided, you know what, 80 cents, I'll take the stop against this, right? Typically for me, I'll never take it all out on the long position. As we hit the first level of resistance, I take a little portion of the trade off depending on my comfort level. If I'm really confident on the trade, I'll just take a quarter off. If I'm, it's making the right moves, but momentum's looking kind of tired, maybe I'll take half off. But I'll always try to leave something on the table for that last stretch into those last targets. Now, any time I take a position off, whether it's a portion, a third, a quarter, an eighth, a half, I always move my stop up. Because if you don't do that, you will start to really mess with your risk to reward ratio and you'll end up with a losing strategy over time. So for me, anytime I take a little off the table, so if I was long here, a tag of the median line here, the 50, yeah, maybe I'll take a quarter of the trade off, bring my stop to break even. As we get to the next level, 200-day moving average, swing highs, maybe I'll take a half off, bring my stop even higher to the last swing low, and then leave the last limit for that 618 at 50.18. Does that make sense, Karthik? Especially if you have a strong entry, you want to fade out of that position. Because if you have a strong entry at the monthly lows that are a key support barrier, you don't want to give up that entry. It's strong. If you're super short term and you're trading intraday like me sometimes, we'll be all in and all out, but we don't have to worry about 50, 18, 51. If we were to take a long here, limit is out here. As long as we're in the weekly opening range, I'm all in, all out. Until we break weekly opening ranges, I typically am all in, all out. Once we get that breakout, now I think we're going to get extension. Now we take snippets off. Little pieces here, little pieces there, all the while bringing up our stop. So good question there, Karthik, and I hope that helps. All right, now goodbye for real. I'll see you all tomorrow morning. Have a great day trading, guys. And I'll see you tomorrow morning, 8:30 Eastern for another session. Cheers. Watch the BOE. It's going to be just ahead of the release of just ahead of our webinar here. So keep your ears peeled for what that vote count looks like and price action in sterling crosses. Have a good one.